I have friends, advisors, and business associates who say I should not tell you this. But this information is important, and I think you should know it. My name is Robert Kiyosaki. I am fourth-generation Japanese American, born and raised in Hawaii. My mother was a registered nurse, and my father had a PhD in education. He was also the superintendent of education for the state of Hawaii. What broke my heart was that although my mother and father had a great marriage, the only time they ever fought was about a subject called money. In 1970, at the age of 50, my dad was downsized. He never recovered from it. I swore my life would be different. So in school today, we're focused on a thing called SAT, or Scholastic Aptitude Testing. We want to find out how good you are at reading, writing, arithmetic. Very important skills. And depending on how well you do with SAT, the next thing they focus on is professional aptitude testing, whether you should be a doctor, a lawyer, fire chief, secretary, or whatever. It's your professional training. But what school fails to focus on or train people on is a thing what I call financial intelligence. We never discuss the subject of money in schools. So what do I mean by financial intelligence? Well, if we gave $10,000 to 100 people, 80 of them, or 80%, would have nothing left at the end of a year. 16% with the same $10,000 might have $10,050, what you would get by putting it in a bank. And 4%, given that same $10,000, would have anywhere from $20,000 to $1 million or more. And that's what I mean by financial intelligence. So when we go to school, we learn to read these things, but we never learn to read these, financial statements or annual reports. We never learn financial literacy in school.
I founded a company called Prime Cable in 1979 with two other people. Today that company, if it were sold, would sell for about $1,600,000,000. I'm a graduate of the University of Texas. I get an MBA in finance. For the last 8 or 10 years I've been a turnaround specialist. So companies will call me and ask me to help them fix their problems. One of the unfortunate things about being a turnaround specialist is that sometimes there's some fat in the organization that has to get eliminated, and so in the last 3 years I have fired probably well over 200 people. Most people that I know haven't bothered or figured out a way to go learn the rules so that they will spend the time and understand how to go make money with money. And that's what cash flow is about. It's learning the rules of the game on how to make money with money. One of the great things about money and the rules of the game for money is that they can be taught and they can be learned. One of the things that is very important to me is that my children especially understand the rules of the game of money so that they will never be one of the unfortunate statistics who gets fired in a corporate downsizing by somebody just like me.
When I studied accounting in school, it was possibly the single most boring subject I ever studied. So I had to create a system that was easy enough for me to understand. So these are the basic forms necessary for financial intelligence. One is called an income statement because it has an income and expense, also called a profit and loss statement. There is also a balance sheet, and the balance sheet has assets and liabilities. And these are the very basics for financial literacy or financial intelligence. I soon realized the main cause of financial struggle was due to confusion between the definitions of an asset and a liability. I looked in the dictionary at the definitions of assets or liability, and I got very confused by the dictionary's definition, so I made up my own. My definition of an asset is something that puts money in my pocket, and my definition of a liability is something that takes money out of my pocket. So what caused my mom and dad to struggle financially is my dad, because his banker and his accountant and his real estate agent told him a house is an asset, by this definition, it's actually a liability. He also counted his car as an asset. Yet by this definition, his car was not an asset, it was really a liability. And if these definitions are still too confusing, I simplify it even further. The new definitions are, if I stop working, assets will feed me, and a liability will eat me. And I hope that's simple enough. So the most important thing about being financially literate, or the ability to read numbers, is understanding a thing called cash flow. I can tell the difference between a poor person and a middle-class person by simply looking at their income statements and balance sheets and figuring out which direction the cash is flowing. So I will show you the cash flow pattern of a poor person. Generally, a poor person, all they have is a job. The income comes in from the job, goes down, they pay their rent, clothing, a little food, and goes out the expense column. And this is the cash flow pattern of a poor person. The cash flow pattern of a classic middle-class person is a little bit different. Income comes in this way, but with a middle class, they probably have a mortgage, they probably have car payments, they probably have credit card payments. It comes up again through the expense column and then out this way. So what you see here are the cash flow patterns of a poor person versus a middle-class person. So the cash flow pattern of the rich is different. The cash flow pattern of the rich flows from the asset column into the income column. So while the poor and the middle class are focusing on income, what the rich are focusing on is the asset column. And the asset column is the great secret of the rich. So for those of us who weren't born rich and what we have is a job, every time money comes in, this is the point of choice. This is where you make the decision to be rich, poor, middle class. If when this dollar comes in and you take the dollar out this way, then it's your decision. If you go and buy yourself a new t-shirt, cappuccino, a new lunch, then you're choosing to expense it right out. You're choosing to be a poor person. If instead, when you get a pay raise or more money, what you do is you go and buy a bigger house, a new car, or you take a vacation on your credit card, then what you are choosing to do then is to be a middle class person. And if you choose, instead, when the money comes in and you choose to put it in the asset column, then you make that decision to be rich, poor, middle class. By putting in the asset column, at this point, you're choosing to be a rich person. But the choice is up to you, nobody else. Earlier in this tape, you met Keith Cunningham. And Keith told me a story about when he was in graduate school for his MBA. A gentleman named Ray Kroc, who was the founder of McDonald's, came to speak to the class, the MBA class, and asked the class, he said, "Ladies and gentlemen, what business am I in?" And the whole class just cracked up. And they said, "Well, Ray, of course we know what business you're in. Your business is hamburgers." And Ray said, "No, my business is not hamburgers. My business is real estate." So what Ray was saying was that his profession was in sales. He basically sold hamburgers. But his business was down here. His business was real estate. So when I ask most people, what business are you in? Let's say I ask a banker. They say, "Oh, I'm in the business of banking." I said, "No, your profession is banking." Or I ask a doctor, "What business are you in?" They say, "I'm a doctor." And what the mistake they made is their profession is being a doctor. So your profession is you working for money. And what your business is your money working for you. And the main reason so many people struggle financially is they're not minding their own business. They're minding somebody else's business. So looking at this chart one more time is over here in your profession or your job or being an employee, you're working for somebody else. You're working for the shareholders. Over here, the first person you're working for is the tax department. Here you work for the government. And over here, if you own a house, you're working for the bank because you got a mortgage. So if you want to be rich, happy, and successful, you've got to mind your own business and not work for everybody else.
Corporate America is very exciting for someone in my position. I'm single, a woman, and doing very well, and I'm very happy with my job, but it takes very long hours and hard work to be successful in corporate America. Cash flow helped me realize that I was spending a lot of time making other people rich, and that I was stuck in a rat race. So, and learned ways that I could get out of that rat race. And it was great experience for me, a learning experience for me.
My name is Jeff Bassett. I'm an investment broker, and I'm 25 years old. I have a degree in economics and was trained on Wall Street. Now, my average client is between 40 and 50, and they've done nothing for their financial future. Now me, I have no plans of working past 30. At 30, I'm going to be in the Cayman Islands, trading options and commodities from my yacht. And cash flow showed me how easy it's going to be to achieve.
So what causes financial struggle is that most people who believe in hard work, what they do is they focus on their job. They have, husband and wife working, and maybe one of them will take a second job, so you have 3 incomes. And so what they're focusing on is income here. So their income goes up, and they believe in hard work. The problem with hard work in the income column is that as your income goes up, so does a thing called taxes go up. So you pay more in taxes, but you feel you got this raise and it's worth it, and so what you do is you go out and buy a big house or a new car or a new boat because your banker or your accountant tells you that it's an asset, and so this goes up here. And so you're working harder, your expenses are up, your liabilities up, and bam, suddenly you're downsized. And what happens then is you lose your income. But does this go away? The answer is no. Does this go away? The answer is no. And that's what causes financial insecurity or financial struggle. The answer is, if you had focused like the rich do on not working for money but having money work for you, even if you lost your job, your assets will continue to feed you. So having a whole stack of liabilities and no assets, that's what causes financial struggle or financial insecurity.
In the past, what we would do is look at jobs as our security, and that no longer is possible. That is an obsolete thought. That's an obsolete process. Our entire educational system has been set up to prepare us to be really good employees. That no longer works because we don't even know if the company is going to be there within 5 years or 10 years. So what we're discovering is that the life of a company as well as the life of an industry can be shorter than 3 years. So that means that we have to be open to looking at different ways in which we can do what we came to the planet to do. So we need to look at our education and we need to look at our knowledge base in a very different way.
So what most hardworking people do is they focus on their income, working hard at their job, income comes in, and the first line of expense for most people is a thing called taxes. But what the rich do is by having their income come from the asset column, the income comes up this way, and the way the rich avoid taxes is just like a fuel filter on a gas line. What the rich do is they attach a corporation or several corporations. And what a corporation then does is bleed off as many expenses as possible before their income is taxed. And that's how the rich avoid taxes, where a person who is an employee or a W-2er is taxed first. So what the rich do through a corporation is that they take off some of their expenses. What they do is they earn, they spend as much as they can, and they're taxed on what's left. And what the poor and middle class do is they work hard, they earn all their money, but the government taxes them, then they try and spend or live on what's left. And that's one of the big differences between the poor, the rich, and the middle class.
Wayne and I own one of the largest real estate schools in the state, and one thing we find about people and students who are entering the real estate business is that we give them the basics of real estate, but they don't know the basics of investing.
Yeah, that's why we're so excited about having the game Cash Flow, because now we can teach the students more about the fundamentals of accounting, investments, and finance, so they'll have the tools that they need to go out and actually do that in the real world.
So one of the secrets of the rich is how they print money. One example is, let's say they buy a house in foreclosure through their attorney's office. They pay $30,000 for it. They mark it up to market value, which is, let's say, $60,000. So they sell it for $60,000, and what they have is in $30,000, which they take back in the form of a note or an IOU. So they've created now $30,000 in their asset column from this one transaction. Or another way of doing it is you take a piece of land, about 80 acres. I paid $100,000 for this whole chunk of land. There was a house on the property, so I chopped off 4 acres and sold the house for $145,000. So I made $45,000 from just selling the house and 4 acres. I then divided up the land into 3 parcels, selling each parcel for $100,000 each, again taking it back in a note or a form of an IOU. So over here I had now invented $300,000 in my asset column. Or another example I do is called an IPO, initial public offering. I put $10,000 seed money into a company I'm forming. For 1 penny a share, $10,000 comes out to 1 million shares. The moment the company goes public, let's say goes up to $1, so 10,000 shares then goes to $1 million, which I don't have to pay taxes on until such time as I cash the money. So these are some examples of how the rich print money. And why the poor and the middle class have such a hard time is what they do is they go and work hard at their job, the money comes in here, and if they try and save something, it goes through a thing called their taxes, and it goes through taxes before it can come into this asset column called savings. So this is an example of why the poor and middle class have such a hard time saving any money. It's because the government takes a part of it before it gets into their asset column.
We had the opportunity to play the game as a family, and it was really nice to have us all around the table having fun. It was also particularly interesting to see how the game reflected real life. I'm an attorney, once upon a time an engineer, but I was never really taught the basic financial principles that are illustrated by the game.
I'm the accountant in the family. That's why he's never really had to learn the basic fundamentals of the game. And so my background, I'm a CPA, my background is accounting, so I understand the fundamentals as presented in the game. And what was particularly fun for me was I was able to help both Mike and my daughter Shelley understand the concepts that gave them problems. So it was fun because we were able to learn together.
I'm a college student. In school you really don't learn much about money and financing, and I was surprised how much I really enjoyed this game. I learned a lot about investing money and financing, and I really enjoyed it. It was a lot of fun.
So a couple of years ago I wrote a book called If You Want to Be Rich and Happy, Don't Go to School. It was an international bestseller. And many people think I'm anti-education. Nothing could be further from the truth. As I said, my profession is education. I'm a teacher. I love learning. And so I think scholastic aptitude, which you go to school for, is important, as well as professional aptitude, ability to be an attorney, a lawyer, a doctor, or a secretary. Very important skills. But also, in this world of great change, financial intelligence is excruciatingly important right now. But this is the reason I created the game Cash Flow. But please remember, it's just the fundamentals, the beginning, the foundation. There's a lot more to learn. But always remember this also. No matter which way the economy goes, ultimately, whether you're poor, rich, or middle class, the choice is up to you. One of the foundations of learning is repetition. So please remember this. The more you play this game, the richer you will become.